I am tired of the stinking thinking that's out there in the world
Thinking.
and the narrative that I'm hearing everywhere. And I have decided to be a counterpoint to that and claim to all of you listeners that this is the best buyer's market that we've seen in the last decade.
There it is.
10 whole years.
Wow.
There's been no better time.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Well, I can certainly say from an inventory's perspective, it's growing, and it seems to be growing daily. It keeps climbing and climbing. We're getting more and more houses available.
So let's talk about what that means, though.
Okay.
So there's more inventory. What is the reality there? We've come out of a market where we had in the neighborhood of 4,000 homes on the market for sale, and buyers had to choose between 1, 2, or 3 houses, if they're lucky, to choose between to find the best possible diamond out of that lump of coal, right?
Yeah.
Well, now we're in a market with this amount of inventory where you might be able to see 20 homes as options.
Yeah.
Now, as a buyer, that's better.
There's more options, and the other part of that equation is, and we talk this all the time, supply and demand is what dictates prices, right,
100%.
guys? Supply is increasing, but demand is flat. It's not gone up. It's not going to commensurate with the inventory, which normally happens seasonally around this time of year. We're not seeing it.
There's normally a volume pickup that happens here.
Yeah.
But that goes to sort of the second aspect, which is negotiability here.
Yeah.
So and it starts out, the negotiations start out with let's besides the numbers, let's talk about the contingencies in your contract. We're in a world now where buyers do not have to waive appraisal contingencies.
No.
They can make that house hit the value, basically,
right.
Appraise what you're paying for it as one of the terms of their contract.
Yeah, the bank and the appraiser are kind of a backstop for you.
100%.
Yep.
You find a flaw with the house, something that gets repaired. They're much more likely today to actually make those repairs than they were just a couple of years ago.
Absolutely.
So this is far better for buyers, right?
Yep.
And I know everybody's got it in their mind right now. You're all thinking, well, prices at their highest levels, interest rates are high. Yes, I acknowledge those two things are headwinds for you, but they're only part of the picture. Let's also remember to think about the other parts, which is, what are my options? I have more options today than any time than you've really seen recently.
Yep.
I have the ability to negotiate safe contingencies built into my contract, and potentially ask the seller to make a repair or two if they find important things that are not working properly, right? All those are positives. And then if you want to get into the numbers, we'll go to the next thing, which is, at this point, we're seeing a bit more than 40% of all the transactions being done in the market have some amount of seller concessions. So this is real money that the sellers are crediting to buyers to do the deal. Now, you can take advantage of that by maybe knocking the price down on the house a little bit. We're seeing that quite a bit in negotiability and price. But we're also seeing, and this is a big one for people, it's large seller concessions to help you to pay the expenses to buy the house.
And to buy down the interest rate.
100%.
As part of that. That's a big thing.
Yeah, so we're seeing, $10,000 and $15,000 and $20,000 credits from the sellers that can effectively get you into the house where all your closing costs are paid.
Yep.
Get you that 5.99 interest rate on your loan.
Right.
Like, they can buy you down to the place you want to be.
Yep.
And they're willing to do it because there's not as many buyers out there as there have been previously, right?
Right.
So sellers don't have the negotiating power they did just, let's say, 24 months ago.
Yeah. So you got less competition, more opportunity.
Yes.
And I would contend prices are pretty flat right now. They're not continuing to climb as the inventory continues to grow, and demand remains fairly flat. Prices have not necessarily gone down yet, but they're flat. They're not moving up anymore. And there's, so look, you might be saying, well, gee, Harv, let's wait until they start to come down. Yeah. Guess what? You could say that, but you wouldn't be the only one saying it. 100%. That's the problem.
There are tons of people I talk to that are waiting for that opportunity to see house prices slip or see interest rates fall. Yeah, that may happen. It could happen.
Yep.
Do you really want to plan your life around the maybe and the what if and that sort of thing? I think you need to be a little more intentional. And then I want to throw out a number for the audience to think about. For those people that are wagering on, want to wait for house prices to fall to buy. The number is this. In the last 82 years, home prices have risen 74 of those years.
Yeah.
They've gone down 6 of those years, and they're flat 2 of those years.
Right.
So if you're going to place your bet, where do you want to put your chips? I'm going to put it on the 74 years that it went up. And not to say that home prices couldn't slip a little bit. But I would say in Nevada, That's not a normal behavior.
Right.
There are markets that waffle up and down. You see California does that quite a bit.
All the time, yeah.
That is a normal cycle for them, but not for Nevada. It is not typical for us to see home prices spike and fall and spike and fall and spike and fall. That's not normal behavior. And we have actual data I could show the listeners about that.
Right.
But it is more normal for Nevada to be steady, Eddie, just slowly rise year after year, this sort of thing. So.
I think Nevada, to be fair, I think Nevada's become more volatile recently,
Sure.
in recent decades, so to speak. But it's still, I mean, if you look at our over the last few years, we're still creeping up, and we're not as crazy as California. We're not like
Right.
that roller coaster there. But we do have some impact from that because a lot of our influx is from California, obviously.
100%.
And that's something else that came out just recently in the paper. Maybe we should talk a little bit about that. But California, the influx from California is increasing again. We're starting to see more and more people coming from California. Part of that equation. So look, like you said, John, I think you said it really well. I mean, I think people out there who have it in their heads, hey, I'm going to wait for prices to fall, or I'm waiting for interest rates to fall. Just know you're not the only one thinking that way.
Yeah.
And in so doing, you're going to be part of the herd
Right.
that decides to jump in all at the same time. And guess what that's going to do? That's going to push prices back up again.
Spike prices, yeah.
Yeah, it's going to push prices up. It's no doubt, because it's just simply, again, guys, it's supply and demand. So strategically, and I was just talking to one of my clients. He's actually a seller right now, and he's a very bright guy from back east. And he was talking about a woman who wrote an article that basically said that new home sales, buying a new home can be, at this point, less money than a resale over the national perspective. And why is that? It's because what builders are doing, John doesn't like this, and I know he doesn't like this.
Yeah.
What builders, they're buying down interest rates. They're selling the rate, okay?
Well,
but
yeah.
guess what? We can do that too.
Sure.
As a resale seller, I can sell a rate because I can help you buy down that rate to do the same thing you would do in a new home. The very same thing.
This is what's moving new homes for sure, is that they're leveraging these giant credits that they can give to the buyer because they've built a giant amount of profit into the house.
Yeah.
That's really it.
Indeed.
I get to sell the house for top dollar, but then I'm going to give you these credits to get you a lower interest rate and move on.
I'll make the point that the new home is not cheaper than a resale. It's not less money. It isn't. What's less that they're comparing to is the rate, and that's what's enabled them to say, hey, there's more value there. But the truth is, we can do the same thing on resale, guys. Sellers are doing it. As a matter of fact, they've learned, they've understand. And a lot of sellers come and say, Harv, make sure they know I will help them buy down their rate.
Yeah, I should land on this hard, which is sellers. If you're a regular home seller out there, you can do the same thing that these builders are doing if you choose to. You can offer your buyers this very low interest rate. You can incentivize the deal to do that and compete on that level.
Yeah, absolutely. No, why wouldn't you want to? That's because that is the only difference. That's the thing that they're using. They're selling the rate, not the house. They're selling the rate. Smart on their part. I understand that's where the mindset is right now. Everybody's talking about rate, and so the new home builders understand that and appreciate it.